Thank you for being here today, Christian.
I'm very excited to be here. Some very important news.
Yes, so this interview will just be focusing primarily on the news that you put out yesterday regarding the acquisition of the Apex mine. But first of all, could you just introduce yourself to the viewers?
My name is Christian Kargl-Simard. I'm a professional engineer with a metallurgy background, turned investment banker, turned CEO of Mine Builders. So been the CEO of Blue Moon now since November 2024.
Excellent. And before we go into transaction, how would you say that Blue Moon stands out compared to other mine builders and developers in the space?
Well, the junior critical metal space, companies that are actually building and operating assets is very small. You can count space in terms of number of companies on two hands. If you want to look at just base metals, it's one hand. So really good spot to be here in the current backdrop. Blue Moon has two mines in construction, both base metal mines. With the recent Springer transaction, we picked up a very significant tungsten deposit, which I'm sure we're going to talk about. And now we've got Apex with gallium and germanium. So we are venturing into commodities that are not truly base metals, but we're utilizing in the US a hub and spoke model where we will be processing ore from multiple mines in one central processing facility. The skill set is similar. We're talking about high grade underground mining for these four mines, including Apex, including Springer. And we're going to have separate processing circuits for each of those mines at Springer, but utilizing the utilities and the permits and logistics that Springer has. We are trying to build a multi-mine, multi-jurisdictional mining company. Clearly, the focus is the US over the next few years, leveraging a Springer, but we are moving at an incredible pace. I think that's a unique aspect. And with Springer Tungsten and now Apex, we're doing some really neat heavy lifting for national security and US domestic supply in the United States.
Excellent. So, could you talk about transaction, the rationale for it, what you paid to take, and how this fits in with your strategy of building your hub and spoke model at the Springer hub and spoke operation at the Springer mill?
So how we got here is going to take you a minute, but it's a really interesting story. So we take over a company that has a California asset, nice polymetallic asset. Don't know the permitting timeline. We buy two assets in Norway. One of them, Nucir, shovel ready. Close that transaction about a year ago. A few weeks later, we have our permits to build a mine in California unexpectedly quickly. Now we have to build two mines. We are permitted in California to build a mine, not a processing facility. So we go out to look for a permitted processing facility. We find Springer outside of Reno. Then we ask ourselves, well, why can't we do that again? Why can't we find another high-grade underground mine in the western US and transport those ores to Springer? Springer has all the utilities, private land, all the logistics. We can have multiple ore feed sources building out a complex. That's how we got going on to searching for the next ones. And Tech Resources in October of last year, about the same time we announced the Springer transaction, started the sale process. So we said, this checks all the boxes. Let's go after it. And then through the whole process, when we announced Springer in October, tungsten prices were $400 a ton. Today, they're $1,900 a ton. And now that the Springer asset, which was built on top of one of the largest historical tungsten mines in the United States, is now very economic and very much in demand with no domestic tungsten production in the US. So this is how we get to the three mines. I think we can do one more, frankly, but obviously we got a lot in the go too.
Then how much did you pay to take?
Yeah, so we were in a unique position having Springer for all the reasons I mentioned. Now, Tech Resources is a significant player in the germanium and gallium market. I don't think they wanted to do a transaction with a group that didn't have aspirations to put in production quickly, and Springer had an added advantage to allow us to get into production quickly. It's also the pedigree of our company as mine builders, mine financiers, and it fits very well there. Obviously, it was a competitive process. We did have value in our shares to offer to Teck, and they're going to become a significant long-term shareholder of ours, and can't wait to do more things with Teck down the road. In fact, I've been trying to do a deal with Teck for 10 years, including my last venture, and my first job offer was with Teck at Trail way back in 2003. So coming from British Columbia, I feel kind of honored to be doing a deal with them. But what else could we add to the equation? Clearly, they don't need cash because they've got $9 billion of it, soon to be more. We did have the optionality of the zinc offtake from our Blue Moon mine. We know that Teck had done an offtake deal with Bunker Hill Mining, which is building a new zinc mine in Idaho, and they are looking to add additional contracts to feed Trail. So we put that on the table, something tangible. We're building that mine right now. We offered a royalty, and we offered marketing rights as well. So when you put it all together in the package, I think it was creative and certainly something that Teck bought. So very pleased with those synergies that came out of the transaction. Shares, we're issuing 8% of the company to them, and we closed close to $7 a share on Friday. So you can do the math.
Excellent. Yeah, about 50 million Canadian. When is the transaction expected to close?
So all of the purchase and sale agreement is signed. All of the annex documents have been agreed to in principle. The delay between announcement and close is to get TSXV venture approval, as well as go through the conveyance of all of the licenses and permits and royalties and all those kind of things. So we expect it to close somewhere in the middle of March.
The Apex mine, before we talk a little bit more about it, could you give some sense of the value, the NAV, or is there anything indications you could give in terms of that?
Apex is a beast. It's unique. I don't know if it's the only one in the world, but I don't know of any other one like this. Only primary gallium and germanium mine in the Western world history. Operated on and off in the 1980s and 90s. This is the first opportunity that I've been involved in where the life of mine is not really driven by the amount of resources and reserves. It's driven by how much production of gallium and germanium you want to produce so that you don't overflow the market. On the germanium side, we definitely believe that we can produce 100% of the US's domestic demand for germanium and maybe a significant part of the Western world. So it's extremely strategic. We're not talking about a big mine. The mine historically was designed for 125 tons per day. We're thinking we'll maybe take it up to 200 tons per day, but within a range of 100 to 200 tons per day. It's all about germanium. That's the main metal, but there's also gallium, there's copper, there's zinc, there's silver, maybe some other elements. The rocks look eerie. They don't actually look like they come from planet Earth. It looks like aliens have planted it there. So that's neat. Super valuable stuff. If last time I looked at germanium price was well over $5,000 a kilo, but of course not a truly transparent market. But the historical reserves and resources range between 200,000 tons to 1 million tons and around 0.1% germanium plus the other metals. 0.1% germanium is 1 kilogram per ton germanium. So that's easy math. If germanium is, I think, $5,600 a ton, each ton of rock is worth $5,600 plus the others, which are bonus. That is equivalent to over an ounce per ton gold in the current environment. How many ounce per ton gold mines do you know? Not many. So your total cost to process, mine, G&A, maybe you're $400 to $500 a ton. You're going to get, say, 80% recovery of the metals, and your offtake is, just for the sake of this calculation, going to be like Offtake is going to take 20% of the value off the top. So if you do the math there, you get really big numbers. You can get to $1 billion NPV 8 under that scenario, actually more, but let's just say $1 billion versus how much we paid for the asset. Now, it's not that simple, of course. It's otherwise people have paid more. It's an opaque market. It's small underground mine, ground conditions maybe not the best in some areas. It's all about metallurgy. There was a flow sheet that was developed in the 1980s. It was bad. And then all they did was try to optimize that bad flow sheet. They didn't start from scratch. Technology has come a long way since then, and in particular pressure oxidation, which is my background when I was an engineer and designing these kind of circuits. So I think we will end up with a pressure oxidation circuit, and we will end up producing a intermediate product like a hydroxide with gallium and germanium, zinc, maybe other elements, and we'll sell that off. We need to do some metallurgical work, and that's going to take us some time to confirm the flow sheet, and then off we go. But it's not a big project, super high margins, and the rate limiting step to all of this is going to be metallurgy.
If you produce a hydroxide, to whom do you sell it to? Or, how do you process? How will that be processed later?
Well, that's the real fun part, which is heavily guarded secrets on flow sheets and how to do that. And I don't want to get involved in that. I'm fine to take my 80% or so of the value, and then someone else down the road takes it and produces the final products, and leaves me with a lot of margin.
But then the question is, why isn't this in production? It's owned by Teck, which clearly should have the technical expertise and the financial expertise to keep it in production.
Well, Teck is, with Anglo, going to be the fourth largest mining company in the world. Do you think shareholders want them to be building 200 ton per day mines? I don't think so. This is a really nice partnership that we have. This fits perfectly within our other mines in terms of potential annual free cash flow generation, our skill set. We've hired the manager who will manage this project. He actually replaced me in my position when I left engineering and spent 20 years on process development around projects like this. Teck wants to stay as a large player in germanium, and they will have exposure through the shares that they own and technical services agreement, marketing agreement, those kind of things. But Teck wanted the best group possible to take this on and to put it in production. So it's a good marriage. 30 years ago, 40 years ago, the gallium and germanium markets were not mature. The uses of them were still being developed. Today is front and center in some of the most important technological developments in the world, military applications, and that market is controlled by China. So it's night and day. The price is kind of irrelevant. Just like uranium, who cares about the price of uranium when you're producing electricity from nuclear power plants? But we need to have the metal or the product for all these industries. So that's going to be our role. And I look forward to providing that function for society, both on germanium, but also gallium and tungsten as well.
It is an opaque market, germanium. So how sensitive is this project, or how sensitive is it to changes in the price?
I can't see any scenario where the germanium price is dropping down to our operating cost on this one. That's the simple answer.
So essentially, you don't need, as with other critical minerals, you don't need floor pricing or offtake agreements that guarantees you a certain price.
The grades at Apex are 50 to 100 times higher than whatever someone might say is the average gallium or germanium byproduct credit. It's like a different universe. We're talking about something exceptional. And in the past, I have talked about if you're going to go into a minor metal, be the best asset, have the best grade, otherwise don't go into it. So it checks that box. It's like alpha min for the tin space. But this happens to be in the middle of the United States in Utah.
Okay, what's the timeline now? You will do metallurgical test work, processing work, flow sheet work, etc., permitting. What's the timeline to the final investment decision?
Well, we think we can open up the mine this year, and then we'll go in and get a bulk sample, and the goal will be to try to do a desktop work on metallurgy by the end of this year to test out our new flow sheet. Assuming that goes well, then we have a decision next year on are we going to go straight into commercial operation and facility and troubleshoot in the commercial scale like the Chinese do, or are we going to do 1 or 2 years of pilot plant work and then build it, and then we probably still have problems. So I probably are leaning on the fast track route, even if we have some troubleshooting and our recoveries are 50% rather than 80%. That's fine. We still should make money, and we're delivering the product to the market. So it is a fast track approach. I do not expect any issues to raise the capital to move it forward once we have confirmed that the flow sheet and the test work on a desktop basis works.
What kind of magnitudes are we talking here in terms of Capex to put this into production?
Call it 80 million US, mostly for the process plant.
Okay, so that includes, in other words, building the processing plant at the Springer Mill.
Yeah.
And is that what permitting is? And we can just talk generally at Springer Mill, because you have 1,200 tons per day. You can put in a flotation plant there, but you will still have, if you're going to produce tungsten, and if you're going to produce from Blue Moon mine, and then also from Apex, you will need 2 more processing lines. What's the permitting process?
Yeah, we think Springer is absolutely ideal to be this processing hub. Private land, all the utilities, sufficient water, significant tailings capacity, next to the I-80, next to a Union Pacific line. Someone told me yesterday after the deal got announced, what we're envisioning at Springer is exactly what they do in China, with big processing centers producing lots of different products, and one line might have a byproduct of something that normally would be waste, but it goes into another facility there. It would be kind of similar to Trail, although that is a integrated smelter. The Trail for Tech, that is. We need to build new processing lines for the ores that we source from our own mines that go into the Springer complex. We will utilize the basic facilities and the permits that are there to fast track. And on the tailings facility, there is a massive unutilized facility that we look to partition into, call it 3 or 4. And each of those will have their own lining or amended permits, but it's there and it's currently permitted for our tungsten ores.
In other words, permitting shouldn't be the bottleneck here for building out the hub and spoke model.
The work that we've done so far is no.
But while we're at it, is there anything else you would add on the Apex deposit or project before we go? A few questions on Springer itself and the tungsten resource.
Well, the fact that the existing resources and reserves are not kind of rate limiting is pretty neat, but there's good exploration upside. There are potential for other breccia pipes. These breccia pipes, these are all oxidized breccias. There hasn't been exploration below the valley floor. Like there's got to be sulfide somewhere around there. So there will be exploration in due course, but we have more than enough to bite into here to make something really substantial.
Awesome. So the tungsten resource, what is the timeline for starting to drill it out and also eventually put it into production, if that is what you want to do?
So 2012, or let me take a step back, the history. 1980, General Electric built a equivalent to current dollars, $300 million plus facility, including a flotation plant, APT facility, only one of two in North America, a 3-compartment shaft, modern hoist room, offices, repair shop, everything. They ran that for a very short period of time before China crashed the tungsten price. They built a Cadillac. They kept it under care and maintenance for many, many years. They sold it to a group that in about 20 years ago spent another $70 million to get everything refurbished and up and running for production. They were turning the mills, they turned on the APT plant, they had the mine going, and then the global financial crisis hit. Prices crashed, company went bankrupt. They hardly operated for any time at all. The group that seized the asset then sold it off to another gentleman who ultimately passed away. And that estate is who we bought the facility from. So you have a facility that's only run for a couple years total over a 30 to 40 year period. And everything is in pretty good condition. Now, when General Electric shut down, they had a drilled inferred reserve, I'm going to call it, of 10 million short tons at 0.45% tungsten plus some moly plus some silver. If that was a true reserve today, and that predates 43101 and QA/QC, but just for comparison, that would be very similar to Almonte's South Korean mine in all respects. In 2012, there was an updated 43101 that came out, and that had a 2.2 million short ton resource at 0.5% tungsten. Relatively small. It only took into account a few scheelite beds, and we were told that some of the others that were in original GE drill inferred reserve, they didn't have the data or they couldn't verify them. So we're confident we're somewhere between 2.2 and 10 million tons. 4.2 million tons is our base case, and we feel we can get to that would result in a 10-year mine life. We are currently in the process of compiling data, acquiring data, starting a permanent exploration team starting this week, so first week of March, accelerating whatever drill program might be required to upgrade those resources, potentially reserves to 43101. That is the kind of the gating item, as well as determining how much water we need to dewater and the timeline to dewater to get back into the mine. Once we know those pieces, then we can decide the timeline to go into production and how it may fit in with Blue Moon. Strictly, we think Springer Tungsten is 18 months to production if we pushed hard, and 50 million US. And there is a significant tungsten stockpile at surface with economic grade, especially at today's prices, that is a benefit to help restart the mill if and when we get there.
Would you use the APTs, process through your APT circuit?
Well, it's certainly quite valuable. They're rare, and the delta between called tungsten concentrate and APT is huge. So there is a toll milling market for that. Remember, there's no tungsten concentrate production in the US. The smelter nearby takes all of their concentrate from Southeast Asia. We could probably source tungsten externally and process APT. I think we would have the option of being able to sell our scheelite con or process to APT. I think we'll probably use the APT plant, but by just saying what I said, we've got good optionality.
So okay, so if you just produce tungsten concentrate, what's the value of that, and obviously the difference between pricing, but if you could give some sense.
Ask me that question later this year.
In terms of tungsten, do you need offtake agreement and some kind of floor pricing, or enlighten us?
Yeah. The U.S. Is very interested in sourcing tungsten. It is not a big contributor to industries, but it's vital. There's no substitute of it, and it touches a lot of industries. And in particular, in kind of a warmongering world that we're in, there's more need for tungsten. Um, so there'll be no shortage of buyers for whatever tungsten product that we may produce. We haven't gotten there yet, uh, but I'm certainly not worried. From a pricing perspective, if the world is becoming like pre 1991 again, so it's bifurcated, um, having domestic source of tungsten is going to be very important, and prices will go higher. Uh, and so I'm less worried if that actually is happening. We have to make a bet on that, on floor pricing or trough pricing, because it's more just has to get produced. Who's going to produce it? And then there'll be a buyer for it. Um, but I'm intrigued about what people that are more knowledgeable about tungsten, seeing that we just gotten the tungsten bandwagon in the last few weeks, what their long-term price is. And Canaccord launched on a company EQR on the Aussie exchange earlier this week. They're using a 1450 US tungsten price long term. That is a very good price. That was extremely economic to Springer. Yesterday I saw a group at 800, and at 800 it's still a mine. If we go down to 400, where we started on the Springer journey last October, we would still make money, but it would be negligible.
Are you looking, or is it possible to get government funding in terms of grants, or I don't know, cheap debt?
We were waiting for the Apex transaction to engage with the U.S. government. I think it is a much more interesting discussion for both parties to have Springer Tungsten and Apex at the table than just Springer Tungsten or just Apex. Our largest shareholder is Hartree Partners. They're one of the largest American-owned commodities firms. We have a very good relationship with them, and they are going to work with us to open up doors in DC. And I plan to spend a significant amount of time in Washington as 2026 comes along to first of all learn more about it, and secondly try to consummate some sort of mutually beneficial transaction.
Could you summarize the catalyst for this year?
Catalyst for we just talked about the two new mines that we acquired in the last month. The bread and butter of this company has been building the new Sear copper mine in Norway, sediment-hosted copper deposit, funded by Hartree and Oaktree, and building the Blue Moon polymetallic acid in California. So continuing to execute on those projects in the background is important. We're inserting exploration now into this company, which is only around 16 months old. So we'll be drilling all of our projects with, we hope, some exciting results. But what's probably the most exciting potential announcement this year would be something to do with the U.S. government, and wrapped in with that, concrete plans on our U.S. growth business. That would be the most consequential. Secondly, a nice surprise on exploration. Thirdly, is the continued kind of check marks. We're on time, we're on budget in terms of construction.
With that, where do you envision Blue Moon Metals in 2 years from now?
We've assembled something that I think is unique, not only to North America, but in the Western world. There are very few Springers in North America. That's a huge asset for us. We do have the asset base to be a multi-billion-dollar mining company. If we can execute and get the reputation of executing not only an M&A and kind of strategy, but also building stuff on time and on budget, then we will have a premium valuation, and kind of sky's the limit from there. So the next few years, 2 years, I think you said, we should have 2 mines in production and a path for the third and fourth mine. And I think we should be in that multi-billion dollar market cap, Canadian market cap range.